Yes, we are counting down to Friday, the much-anticipated interim budget, and we are here with the first of the wish lists. So what does the insurance sector seek from Finance Minister this time around? We have Yash joining in with those details. Yash.
Well, Surabhi, exactly that time of the year when all the sectors, companies start lining up their expectations, and the insurance sector, of course, life and general, both have an exhaustive list when it comes to budget expectations. To start with the life insurance space and on the pension portfolio to start with, here essentially life insurance companies expect a complete tax-free treatment when it comes to the pension which is received by policyholders in that particular portfolio. Also, they also sought the government to make a separate section for IT exemption when it comes to the pension products, the pension portfolio, just like the ATCCD vertical which exists for NPS, just to bring the pension portfolio under insurance vertical at par with NPS. Apart from that, of course, a separate section under IT exemption tax is also sought when it comes to the premium which is paid towards protection of pure term policies. Apart from that, of course, the much ambitious and the flagship program, Ayushman Bharat, these companies, insurance companies, seek what is an idea about the further funding and the way forward when it comes to that particular plan. The general insurance space, some very interesting proposals and expectations on that side as well. General insurance companies have sought a mandatory home insurance which they think should be given, should be complemented with home loan, and the premium here should essentially be deducted either if there is a home loan component involved, then from the EMI. If there is no home loan component involved, then in that case the premium should be made a part of the property tax which is charged. Apart from that, there are certain reports which suggest that the government might look at infusing approximately 4,000 crore when it comes to the PSU general insurance companies. Of course, this is to shore up their capital, to improve the solvency, so that of course the original plan can be executed, which is to merge them and list them eventually. And the last but not the least, there is also an expectation that the government will make it mandatory for all employers which have an employee strength of a particular limit to make health insurance compulsory.
Health insurance, always a very, very important thing. I couldn't agree more. All right, Yash, thank you very much for that. Well, with that, we'll move on to the banking sector. Ritu is here with the key expectations from the banking universe.
Well, first and foremost, it's always, recapitalization for public sector banks, something that, the bankers look forward to in union budgets. In this vote on account as well, bankers are hopeful that the next tranche of PSB recapitalization may be announced. Remember, almost 1.06 trillion rupees have been infused into the public sector banks in FY19. But besides this, of course, there are some other important things that banks are watching out for. One, banks have sought GST rationalization on bank accounts. It's also possible that this demand may be taken up by the GST Council instead of the Finance Ministry. Second, they've sought a uniform stamp duty across India for documentation along the lines of GST. Third, the Deposit Insurance and Credit Guarantee Corporation, which covers the depositors of public, that coverage they seek should be enhanced from 1 lakh to 5 lakh rupees. Additionally, they've sought reduction in the tenure for tax deposits under ATC to allow, to make FDs a more attractive scheme for savers to come forward. They want the tax deducted at source limit for public to also be raised from 10,000 rupees to 30,000 rupees annually. And they have sought some subsidies to open rural ATMs or branches in rural areas because, banks do not get as much business out of rural areas, and they wanted some support from the government to open new ATMs. Also, they've sought, approval to raise tax-free bonds in order to support the infrastructure lending, something that the government has also really been pushing for.
Plenty buzzing, starting on really with the iron ore prices, which did surge nearly 6% today to a 16-month highs. And this is after the Whale mine shutdown that is expected to result in 1.5% of production loss. And that really seems to be pushing the iron ore prices higher. And that has pulled the steel prices up with it. Many of the metal prices actually are trading in a positive zone. Can't say that about the sector because it's quite mixed, and there's plenty happening in this week, including the US and China second round of talks. That's on Wednesday. It is the US non-farm payroll data. That's on Friday. And then, of course, it is the US Fed meeting as well that begins on 29th and 30th. So those are 2 days slotted for that too. So a very data heavy week this one is going to be. But it is the crude oil prices that we are watching at this point, nearly a couple of percentage points on the lower side. To talk more about that, we have with us Vandana Hari of Vanda Insights. Vandana, hi, welcome. 2% down is what we've started this week with. What are you reading? Is it all got to do with the increase in the US rig count, or would you also deem it as a profit taking?
Good afternoon, Manisha. It's just become impossible to read. That's the honest answer. So if you look at Brent and TI now, they're both down just about $1 from their Friday's close. And the most straightforward answer is that there's really no reason, obvious reason for crude to be plunging like this. What one's best guess would be, and as you just mentioned, it's a data heavy, it's an event heavy week. And given the nervousness that has been in the market for the past 3-4 months, I think investors are just basically turning cautious. And cautious for them means sell now, wait to see what the news turns out to be. And the news from, of course, the US-China trade talks, very key, very important over Wednesday and Thursday that everybody will be watching. There's some announcement from the Fed expected, though that's not expected to be any bad news, but still there is nonetheless a Fed announcement expected on meeting expected on Wednesday as well. Then there's a vote on Brexit Plan B tomorrow. So, and then of course we have fresh political crisis in Venezuela, and it's all just basically adding up. Venezuela actually technically should be bullish, but not for now. It's just all adding up to more uncertainty and just a risk-off mode again.
So again, we seem to be shifting towards macro more than the demand and supply outlook right now, where there are more reports suggesting that 100 million barrels per day of a demand is quite achievable for this year, and the OPEC cuts is something that we haven't seen the first figures of come in as well. So do you think by the time this month ends and weekends, we will perhaps have more bullish news to react to?
That's hard to say. You're absolutely right about demand. Nobody has rung any fresh alarm bells over a demand slowdown for more than a month now. So the last revisions were actually, if you look at IEA and OPEC, the last downward revisions for demand estimates for 2019 were back in November. They have held on to whatever projections. They haven't. In their view, it's not the situation hasn't worsened. But the problem with demand is that it's infinitely more difficult to assess than, let's say, supply. So what's happening for the time being, and I think for the foreseeable future, is that the markets are just simply, the oil markets are just simply swinging up and down with sentiment in the broader financial markets, which is why you see more often than not, if you see red across the energy complex, pretty much the chances are you're seeing red across the equity markets as well.
So, Vandana, what is your sense? Are you sticking to your earlier range for the crude oil prices, which, I mean, you've been saying a $10 range really. Do you see that holding as we move ahead?
I have no reason right now. So we're going to see plenty of volatility from day to day. You're going to see very high intraday volatility, and certainly in a week like this. But I have no reason to make a dramatic upward or a downward revision in my expectations. I think 60 to 70 is still the fair way for crude prices. Yes, of course, let's imagine if the US and China just doesn't work out and, it spirals downward, the whole trade conflict. Then, of course, there's a very distinct downside risk to oil prices. But really, I mean, that's also hard to imagine. As I've been saying, I think both the sides seem very intent to at least make something work, even if not a full-fledged deal. So, yeah, I think I'm still sticking to my expectations.
All right, Vandana, we'll let you go at that. So $60 to $70 per barrel may just about hold on, and it has been holding on as well. Every time we see a profit taking coming in last many days, $60 per barrel hasn't given way on the lower side. Coming in right now is an exclusive conversation from Ajay Piramal. Nisha Podar of CNBC TV18 is in conversation with him.
Ramal, for joining us. So for a few questions on the overall NBFC space and the real estate exposure. Starting with your company, this time you brought down the overall exposure to real estate developer finance. Is that part of a strategy to de-risk from the sector?
So part of our strategy has always been to have a diversified book. We began with real estate because that's a space that we understood really well. as we have been developing a better understanding of the other spaces, we have gone to keeping on adding those. So our real estate exposure today is about 70% of the book. We've added, last year we started into home finance, and that space that has grown well. We have about a book of 4,000 crores on that. And we expect that by the end of March 2019, we'll take it to 10%. In addition, we've got a small and medium scale industry loans as well as other corporates other than real estate loans as well.
All right. So how do you see the real estate exposure of your NBFC? Are there any pains in the system? You have top 3 clients. Those are Lodha, Vatika, as well as Omkar. Is there any stress seen from these top accounts?
So we've been actually looking at, and we've been saying this for a long time, that the real estate space is seeing a consolidation. Good developers which have a good name in the market, which have good products, and which is a good location, are actually doing well.
All right, that's Ajay Piramal really talking about the company and the numbers there. But let's also turn back onto the commodities. And Navneet Damani joins us now. Navneet, hi, to the crude oil prices first. And as we were discussing earlier, it is getting into an uncharted territory and 2% of a decline. How would you explain that?
Hi, good afternoon, Manisha. We have seen crude oil prices consolidating or probably correcting after a brief rally that we have seen. So about 18-20% rally is bound to get some kind of retracement. That is what we are seeing on the prices. I guess that there could be some more pain, and probably 52 for the WTI or 50.5 for the WTI could be on cards, and any rallies could be a selling opportunity. We'd like to sell around 3770, which stops about 3820, targeting 3700 outside.
Navneet, a word on the gold prices also. We're trading at a 5.5-year highs in the Indian markets. At these elevated levels, are you still buying?
Well, we've been bullish on gold all throughout, and we continue to expect that this rally could continue and has got more feet to add on. About $1,300, it's likely to have even more thrust, and probably 1345 is what we are expecting over the next couple of months. We would like to buy on any dips towards 32,400, which stops below 32,300, targeting 32,650 on the upside.
Navneet, before we let you go, what's your sense on the metal prices? Quite mixed there, but any buy call that you have there?
We've seen copper prices surging about 2-2.5% in the previous session, and today also holding marginally above. We expect that copper could be benefited by the movement in precious metals, as well as the month-end meeting which is scheduled between the US and Chinese vice premiers. So that could add on to some momentum for the base metal complex. Particularly copper looks bullish at around 426 levels, which stops below 423, targeting 432 on the upside.
All right, buy calls coming in for the metal space. Navneet, thank you so much for joining us with your strategies. And with that, it's out of time on this edition of Closing Bell. Kritika brings you After the Bell after this break.